everyone, welcome back with me. Don't forget to like, comment, share, and subscribe to the channel. Three Bitcoin price metrics suggest 9th, 10% pump mark the final cycle bottom. Is the BTC bottom finally in? Data suggests that bears might be losing their tight grip on the market. The correlation between Bitcoin, BTC, and stock markets has been unusually high since mid-March, meaning the two asset classes have presented near identical directional movement. This data might explain why the 10% rally above 21,000 is being dismissed by most traders, especially considering S&P 500 futures gains per 104% in 2 days. However, Bitcoin trading activity and the derivatives market strongly support the recent gains. Seriously, the current Bitcoin rally happened a day after the White House Office of Science and Technology Policy released a report investigating the energy usage associated with digital assets. The study recommended enforcing energy reliability and efficiency standards. It also suggests federal agencies provide technical assistance and initiate a collaborative process with the industry. Notice how the peaks and valleys on both charts tend to coincide, but the correlation changes as investors' perceptions and risk assessment vary over time. For example, between May 2021 and July 2021, the correlation was inverted most of the period. Overall, the stock market posted steady gains while the crypto markets collapsed. More importantly, the chart above shows a huge hook gap being opened between Bitcoin and the stock market as stock railed from mid-July to mid-August. A comparison using the same scale would be better, but that does not work due to the difference in volatility. Still, it is reasonable to conclude that historically this gap stands to close. The S&P 500 futures declined 18% in 2022 until Sept 6, while Bitcoin dropped 60.5% during the same period. So it makes sense to assume that if investors appetite for risk assets returns, assets with higher volatility will outperform during a rally. There are other factors that are in play too, so there is no way to predict the outcome. But the return of investors' appetite for risk would justify Bitcoin's outperforming the stock market and significantly reducing the performance difference. Pro traders were not expecting Bitcoin to bounce. Bearish traders were liquidated on 120 million in futures contracts at the highest figure since June 13. Typically, one would not expect this outcome considering Bitcoin had lost 13% in the 2 weeks leading to September 7. But one could assume that short sellers' bears were caught by surprise as the exchange liquidation engine scrambled to buy those orders. However, there is other anecdotal evidence hidden in the liquidation data provided by the derivatives exchange. Notice how retail-driven exchange Binance and Bybit represents a mere 17.4% of the total orders that were forcefully closed, while their combined market share on Bitcoin futures is 30.6%. The data leaves no doubt that the whales at OKX and FTX were the one being squeezed. another interesting piece of data September 9th. Maybe that's all from me. Thank you for watching. Don't forget to like, comment, share, and subscribe to the channel. Bye bye.